spoken a lot about, for example, the great franchise of HDFC Bank, how it has been building up its market share, etc. But the HDFC Group, whether in 2021 or the early signs of it in this year, not so encouraging, right? On the other hand, you've got public sector banks like an SBI, which has outperformed the market. The expectation is the public sector banks will be outperforming. Will you be making adjustments in your portfolio, or is this a space that you would be looking at, especially when the other franchise you bet on in the financial space is Bajaj Finserv, but we've been talking so much about PE compressions as well?
So I've lived in India now for 13 years. I've looked at SBI's numbers for last 20 years, going back 20 years. I haven't seen them deliver a return on equity above their cost of equity in this century. So when they do so, we'll obviously be happy to have a look, because again, staying with fundamentals, difficult to take the money from hardworking families and say, I will take your money and I'll invest it in a bank which doesn't deliver a return on equity above cost of equity. On the other hand, let's focus on HDFC Bank. They have gained more market share than the entire private sector banking space plus SBI put together in the last 3 years. 3 years ago, market share was 7%. Today it's 10%. Add up all the private sector banks, add up SBI, in the 3 years, they haven't got remotely close to HDFC Bank. Asset quality, net NPAs, different league to any other large private sector bank or to SBI. Net interest margins, obviously very good because of their famous CASA franchise. So, unless I'm very, very obsessed about short-term movements, I don't see why we and Marcellus or indeed anybody else holding HDFC Bank bank shares out there should lose sleep. Impeccable operating performance quarter after quarter, and 3% market share gains in 3 years. 3% market share gain in 3 years. I haven't seen any bank do that anywhere in the world. That is phenomenal. At this scale, to go from 7% to 10% through COVID, through the disruptions we had, is phenomenal. Just to put it in perspective, Kotak Bank's market share is 2.5%. That means in the last 3 years, HDFC Bank has added on a bank much larger than Kotak Bank. But obviously those who focus in the work in the stock market focus on noise and news flow. We don't do that. We focus on the fundamentals and keep our eye on the ball.
Mr. Balwa, you have already also attempted a transaction earlier with the Godrej Group, which got terminated. Tell us about this money, this transaction, the funds which should be coming in. What is the requirement right now at the company level for your expansions, and what are the expansions which is lined up? If you could share some color on what lies ahead.
We have, about 100 million square feet of ongoing projects, land potential within the company. So with about 1,550 crore rupees of equity infusion, this will largely help the company to become debt-free by 31st March 2022 and also augment the long-term capital requirements of the company.
You've also announced a capex of about 18,500 crore rupees over the next 5 years. What is the expected asset turnover ratio for this capex, and how much of the top line growth could this capex lead to going forward?
Yeah, this capex of 18,500 crores, we are going to add another 6 million ton capacity, and we will be in Angul, we will be about 12 million ton, and Raigad will be 3.6 million ton. Put together, by 2024, we'll be at a level of 15.5 million ton capacity, and we are expecting a good market, because country this year is going to produce about 118 or 120 million ton steel, and next year onwards we should aim for 140 to 150 million ton steel production and consumption. The current financial year, the steel industry as a whole has done a remarkable exports, that is about put together 24 to 28% of the total produce from the country, and that has brought a lot of foreign exchange revenue. I think this tempo will be maintained. We'll be in a position to export about 25% of our total produce to the rest of the world, and the market is likely to be in a very, very positive frame.
On your order book, how much is 2G, how much is 1G, how much is international? That's one way of looking at your order book. Other way is how much is old business and how much is new business. Old business is ethanol, new business could be alternative fuels.
So let's put it like this. So I would not recall ethanol as old business, because there is still a very, very positive story in India and is still continuing to develop in that direction. So if you look at our quarter's order book, it's close to 1,000 crores, almost 950 crore plus order book that we reported. So a significant portion of that is coming from ethanol at the back of the EVP 20 program and the capacity creation that is happening at the back of it. So we expect that story to continue. Our understanding is that we will still see a lot more capacity to be built. As you probably know, India just declared that we had finished the ethanol year at about 8.1% of ethanol blending. The target is to go to 20%. So there is still a long journey to be undertaken. And so ethanol story will play out. The alternative fuels that you talk about are on the horizon. That is something that will happen and play out in the future. As of today, the work is around ethanol. Our engineering business especially are also beginning to look positively upwards now, and that is something that is of interest to us, because one of our business arms is also going to be very focused on exporting, so which is obviously a focus area for us.